What are the top reasons why the housing market will not crash?
Welcome to your Money Monday.
Welcome to session 323, brought to you by the Mott's team with Cutler Real Estate. Why the housing market won't crash? First of all, let's talk about interest rates. That's a big talk on the street right now. Remember, inflation is the enemy of long-term interest rates. So inflation gets rates to move up. People go, why are rates so high? Because of inflation. So that's a measure that the Fed takes to slow down inflation. So right now, look at this chart. You looked at rates are actually stabilizing and even going down a little bit. So the question of the day is the Fed getting inflation under control with the easing of interest rates happening? It's the question out there. We'll see. Let's go back to why the housing market won't crash. The heart of why the housing market will not crash is actually in the inventory, okay? 3 places that housing inventory come from. Number 1, existing homeowners. They're actually putting listings up for sale. That's where the majority of listings come from. Number 2, new construction, new builds. So we're gonna talk about that today also. And number 3, where do listings come from? Distressed properties, foreclosures, and short sales. So the biggest problem, the heart of why the market will not crash is there's not enough homes for sale. Nationally, there's about a 3-month supply. You can see back in the crash, the big red lines there. And again, it's a mortgage crash, not the housing market crash. Okay, the big red lines are showing that there's 10 months supply, from anywhere from 8 to 10 months supply of homes for sale there. So 10.4 months to be exact. So look how much more homes were on the market back then. It was astounding, crazy. Another reason, monthly new residential construction. Look at building permits, housing starts, under construction at the end of the period, and housing units completed we're going to talk about or show today. So building permits and housing starts are actually been down in May and June. They're on pace for 1.3 million homes to be built, okay? That is not a pace for oversupply, folks. So no worry about new construction. It is part of the solution though. Then let's talk about the big part of the lack of foreclosures right now. Why is there a lack of foreclosures? The big reason is because these lending standards right here, they're still under control. When they were out of control in 2007 at its peak, that's when they were giving away the money to people that would just fog up a mirror. So, people were using their homes as ATM machines back then, just going crazy. Lending standards were not in place. Now that lending standards are in place, look at what's going on. We're in good shape, okay? Foreclosures activity by year. Look at that, bam. It is so low right now compared to where it was again when the market crashed. So there's not a bunch of foreclosure out there. And remember, 2020 and 2021, there's a moratorium on foreclosures, and they're still well behind the pre-pandemic times of foreclosure. So, bam, here's where we're at. There's not any foreclosures to be adding to the oversupply. There's no oversupply. So, and then you're looking at how people are getting out of being in trouble in forbearance programs and stuff like that they set up during the pandemic. Most of them are getting out. They're fine. 36% were paid in full, 45% of them were workouts or repayment plans, and only 18% were still in trouble. But this is a big thing, folks. Even those in trouble have equity and can cash out and get away from their problems. So this is going to be very minimal again. So that is why we are not in a problem here. So foreclosure activity across the United States continued its slow, steady climb back to pre-pandemic levels to the first half of 2022. While overall foreclosure activity is still running significantly below historic averages, the dramatic increase in foreclosure starts suggests that we may be back to normal levels by sometime in early 2023. Now that's normal levels of foreclosures, which are still going to be way less than back in the day, folks, okay? So months inventory, really what's going on is today, look at that line there, that's where we're at nationally, and look where we're at, in northeastern Ohio right here. We're way lower than that with only 0.065 months supply of inventory. So locally, we're way bigger, deeper into a seller's market than nationally. So we're way below national on that. Then if you look at 2008, 2010, how high the inventory was, that shows you compared to where we're at now. So we're nowhere near a housing crash, as you can see. Okay, the normal market is 6 to 7 months, and still look how far below we are on that. So that is where we're really at, folks. You know, nationally, 2,900, 2.9 months or higher, and here we are, you know, at 0.065 here locally. Okay, so if you have any problems or you want to know about what your home is worth in today's market, go to www.yourincreasedhomevalue.com. That's yourincreasedhomevalue.com to get your value emailed to you within minutes. Or if you're buying a home, want to know the latest what's going on, buywithmots.com. You'll get a free guide. And if you're selling a home, a free guide to selling your home. Go to sellwithmots.com. I'm Rich Motts, and that's Money Monday. Thanks so much.